at some point, if investment demand kicks in, which it seems likely, to the point where it starts to crowd out the industrial buyers, there's going to be a fierce competition for the price. And when you have that type of fierce competition, it's reasonable to expect prices to go up. It's a bidding war.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And now back to part 2 of the interview with Ted Butler of Butler Research.
If, as and when they do rush to panic, we're going to see it in the price. And it's going to be there black and white. I don't know how it gets, resolved any other way. Somebody's going to have to, report these losses. We're approaching the quarter end, and all this stuff has basically transpired this quarter in the last few months. So, maybe some kind of reckoning is soon. But the minute these guys, these big shorts, can't come up with, all the money in terms of margin calls and putting up additional margin if they go short more contracts, the minute that stops, the game is over. And I sense that we're closer to that than we've ever been before.
Yeah, it sure seems like we're there or headed there. In fact, I told you via email the other day I had a question I was excited to ask you, which perhaps this is a good time, in that if I had told you 4 months ago when silver was trading about $14.50 that in the next 4 months you'd see over 120 million ounces added to the ETFs, would you have thought that would be possible and to still have the price around $18? Or I almost was guessing that if I had told you that 4 months ago, you would have thought that would probably be the end of it, like I would have as well. Any comment on that?
Yeah, no, that's the way you phrased it is that's exactly how I would thought. It'd be impossible to buy 120 million ounces of physical silver. I'm assuming it's physical. I have no reason to doubt it. It's got the serial numbers, the hallmarks, the specific weights, all this stuff is available. So I would say, of course, that's got to drive the price substantially higher than where we are today. However, with the benefit of hindsight and watching this thing, evolve as I think it did evolve, originally I would have thought that somebody coming in buying 120 million ounces of physical silver in the ETFs would have been plain vanilla, combination of retail and institutional buying, as is generally the case, or before this. But as it turns out, that wasn't the case. And what happened was, it's a little bit of a complicated story, but originally there was a big 100 million, 120 million ounce a futures position bought on the COMEX by a big long, because the concentrated long position shot up dramatically over a couple of months period of time. And then this concentrated futures position, which is strictly paper, admittedly a paper position, was mysteriously, even though it's not that complicated, transferred, and converted into the silver ETFs, the SLV and some of the others. That explained how it wasn't a broad-based, plain vanilla buying that accounted for the 120 million ounces of physical silver that went into it. It was a conversion by a very sophisticated buyer on the COMEX who bought the futures. He did it. Look, if I had the $1.5 billion to do it, and I really thought about it, I think I would come close to have done what this particular entity did. He bought 20,000, roughly 20,000 contracts of COMEX futures, silver futures, which is 100 million ounces, converted it quickly into the ETFs, and converted his paper position into a physical position. I think he might be actually, he or she who did this might actually started converting the shares of the SLV and some of the other silver ETFs back into metal in his or her own name, and that would suggest that we're going to go down in holdings on the physical silver ETFs, but that's a separate issue. That's the only explanation I can give you why we only moved $4 or $5, okay, as a result of this 120 million ounces of physical silver being bought. But that's what it looks like now. Now, had you told me, back then that would you think somebody could come in and buy 20,000 contracts of futures and then convert them into? I don't think we would have had that conversation, because I wouldn't have thought it up. But after observing what has taken place and looking at the facts, that it's clear that's what took place. What's going to happen from this point, I don't know. I mean, the guy or girl has got 100 million ounces of physical silver. He or she is ahead at least $3 or $4. So he's ahead, $350 million on the purchase that he already made. And I don't think he would be going to all that trouble. I don't think he's looking for a quick trade, even though I don't speak for whoever it is. I never would have thought of it, okay, but only after observing what took place along the way does it come close to making sense.
Yeah, and again, you mentioned the switch over into the ETFs like SLV, and the possibility that some of those could be converted, because it was interesting on this chart that I look at that basically saw pretty exponential line straight up over the past couple months, has come in over, I guess it was up to about 1,145 million ounces or 1.145 billion. Came down about 9 or 10 million ounces in the last week or so. Does SLV report if people are actually converting shares into physical? Did they report that, or is that another black box?
No, it's not. Well, it's reported in a roundabout basis. What basically the number of shares outstanding has to equal on a strict formula, allowing for the discount for the accumulated management fee each year. The number of shares outstanding has to match the amount of physical silver held in the trust. The only variable would be a short position, which, by the way, comes out later on today. The short position might alter it a little bit, but for every share outstanding, there is a certain amount of metal. It's one share for one ounce minus the discount, which adds up to like 6.5%, since it's been around for like 12, 13 years, the SLV. In any event, it doesn't show, you won't see conversions per se of where somebody converts shares into physical, okay? But you'll see it in that the number of shares and the amount of physical metal will go up or down, in this case down, as a conversion takes place. So look, this is one of the ways that probably the principal way by which, this is not new, this is how I would claim that JP Morgan picked up at least 250 million to 300 million, maybe more, okay, of the 850 million ounces I claim JP Morgan has accumulated since early 2011. The principal source, I believe, of the 850 million, 250, 300 million ounces or more, has come from conversions of shares of SLV into metal, which is not a big deal. It's just you just convert it. Especially, it's not a big deal for J.P. Morgan because J.P. Morgan is the custodian. It's like it's easier for them than anybody else. So what they would do quietly over the last the 8 years to do it, they would buy shares of SLV, especially when other people were selling, prices were going down, they would buy. And then when it quickly thereafter, they would convert their shares into physical because it would take them out completely from having to report anything. The SEC you have to report if you own 5%, 10% of the shares. Well, if you convert it into your shares into metal as you're going along, you don't have to report anything. So I've been following these conversions principally by J.P. Morgan for the last 5 or 6 years. And that's what helped me realize that, hey, we might see a big decline, all things being equal, a big decline in the holdings of SLV if the guy or girl who just bought all these shares decides to hold the silver directly in their own name and not through the ETF. And the reason you do that is you can save some money. It's cheaper to store it on your own. You probably don't even move it. It probably stays in the same London warehouse. And instead of paying a 0.5% annual fee to the SLV, which everybody does, who owns it, you can probably negotiate a rate of like half of that, and it adds up. If you got like $1.5 billion worth of silver, you might save $4 or $5 million a year, which better in your pocket than in somebody else's pocket. So it makes sense that somebody would do this, and only because I followed this thing from J.P. Morgan for so long was I thinking, wait a minute, now that the guy's got this entity's got 125 million ounces of physical silver, what's next? I think the logical thing would be to lower the cost of maintaining that position, like anybody would do. And that might mean converting the shares into metal, which will look like a redemption and that people are selling the SLV, but that's the furthest thing from the truth.
Yeah, and we can only await further comment from the Department of Justice if the bank that they described as a criminal enterprise and are using the RICO statute against if there'll be any comment on having them as the custodian for SLV, the largest pile of metal. So it's quite a circus. And one thing I was wondering is that, let's say for whatever reason, the Department of Justice drags its feet or nothing happens and it comes down to actual physical supply and demand where, according to Silver Institute numbers, which they factor investment demand in first and then calculate their supply and or their deficit or surplus. But at least according to their numbers, showing a deficit, I think 5 of the last 6 years, we have mines been shut down or new projects not brought online. So I would think it's safe to we'll see a lowering of supply this year. Again, we've talked about the metal that has been reportedly going into these ETFs. I think I know the answer to this, but is there any sort of metric of at what point do Apple and Samsung and all these companies that say we need silver, and as these numbers just keep getting more and more divergent, is there any way of measuring how close we are to some sort of industrial shortage? I know we talked before about how you would have thought maybe 120 million ounces would be over that, but any thoughts on that?
Sure. I mean, that's been the prime reason for expecting silver to climb in price, which it has climbed. But the main reason people have thought for decades and decades, for maybe half a century, is because um, this pending physical shortage, which is still there. It hasn't gone away. I don't think I accept necessarily the methodology for the Silver Institute, because I don't think there's an actual deficit. My definition of deficit is that at the end of the year, you got less silver in inventory, total inventory, than you had the year before. We don't have that. We still have growing inventory, whether it's investment or something else. So I might take a little bit issue with that, but not with the basic premise that at some point, here we have a vital industrial commodity that also happens to be a prime investment asset, and it's the only one of its type. You can say platinum or palladium, but it's not. Platinum and palladium are not mainstream investment assets. Okay, it's their niche products. But in any event, silver is the only one that is an industrial commodity and also an investment asset at the same time. And while industrial demand in all forms, takes most, 90% of all the silver produced in a year, both on a mining basis and a recycling basis, it's the current 10% that investment demand speaks of that can explode overnight. It can happen, with the flip of a light switch. So that is the basic premise. If investment demand kicks in, then it's going to be Apple and Samsung and any other industrial user of silver in competition with investment buyers. It's not good, it's not bad, it's just reality. That's just the nature of the beast. It's both, silver is both an industrial item and an investment item. So that is out there. At some point, if investment demand kicks in, which it seems likely, to the point where it starts to crowd out the industrial buyers, there's going to be a fierce competition for the price. And when you have that type of fierce competition, it's reasonable to expect prices to go up. It's a bidding war. The only fly in the ointment, which has come out over the last 8 years, is that I have to be consistent. And if I'm saying that J.P. Morgan, the crooks at J.P. Morgan, let me clarify that, have taken 850 million ounces of silver in their own name, well, they become a factor in the future supply-demand battle that we envision that has to take place. So if J.P. Morgan desired and wanted, it could satisfy with its own physical supplies any deficit that might arise for a good number of years. I have to be objective. I have to be fair about this. If I'm going to say that J.P. Morgan owns all this silver, I also have to admit that, if they wanted to, they could satisfy any shortage and prevent silver from going up in price. However, I trust that J.P. Morgan is, as I look at them, just basically greedy pigs, and they would do no such thing as look to suppress the price of silver once it started running and once it got into an industrial type shortage. So, because they would stand to make much more money by the price going up than in keeping the price suppressed. But that's somebody, if I want to argue with that, that might be a legitimate argument.
Yeah, and Ted, I guess the last question for you today. I'm a fan of anytime you're studying something, if you look for similar comps and anything you can learn from that. Although the more I dig into this, and I guess the whole COMEX thing is a relatively new phenomenon, but is there really any similar market example like this that's happened previously where you have all this leverage, you have these supply and demand factors, or are we really in uncharted territory to see how this all ultimately unravels?
Well, we do have, not just in modern times, but in times way past, okay, instances of price manipulation, and specifically of commodity price manipulation, going back to, you know, copper and, soybeans. There's lots of examples. Most of the examples, okay, are of the long side variety, where a concentrated buyer would come in and buy enough of the commodity to drive the price up. That's the definition of manipulation. We've only had a couple of instances of that occurring on the short side, and people get confused with short positions, and it's just not the same. They don't quite understand it. We did have a manipulation in the Maine potato market back, in the early 70s, which was a short side concentration, a short side manipulation. And as a result, the market basically blew up and ceased existence. I don't think that's going to happen with silver, but we don't have many examples of manipulation to the downside. Most of the examples we have are to the upside, but the basics are still the same. It's still based upon a concentrated position. In a long upside manipulation, it's a long concentration. In a downside manipulation, it's a short concentration. And that's just the way it is. So yes, there have been examples where this has happened before, but no, it's not that common.
Well, Ted, I sure appreciate you joining me today and sharing the insight into what's going on, and certainly as it continues to develop. I know I'll be reading your column. I really look forward to those every Wednesday and Saturday. And perhaps just in wrapping up, you can let folks know the address and anything else you'd like to pass along so they can find you.
Well, thanks. Yeah, just go to Google and type in butlerresearch.com. I think there's a slew of free articles that you can read without having to sign up or anything like that. Obviously, on the current stuff, you have to sign up.
Well, we'll have that link below because I can say firsthand, this was the primary reason I left Wall Street, because I was so fascinated by what was happening. So whether people have been following for a while or are new to this story, you're coming along at an exciting time. And Ted, you do a great job of keeping us all posted and really brought a lot of attention to light. Who knows if Department of Justice would be doing this were it not for your efforts. So again, I thank you for doing all that you've done and joining me here today. And we'll look forward to checking in again soon, because it should be fun.
Yeah, thanks a lot, Chris. Let's stay in touch.